So that was just a funny video I posted on Instagram, and I love that scene, right, in Scarface. So you can see that Novo Nordisk actually partnered with HIMS to start selling Wegovy through the telehealth platforms, right? So I'm gonna tell you why this is bigger than just the partnership and also the revenue that they're gonna get from it, right? So you can see HIMS stock obviously posting that meme because it's up like 23% at the time of closing. When the stock opened, it was around $38, and then it came back down to $35, right? This is perfectly fine, right? Unless you're like FOMOing in at $38, because you can see that there's a bit of a resistance here based on these candlesticks as well as these candlesticks. So obviously if it has resistance here and it comes to pull back to this 200-day moving average, perfectly healthy, right? And you can see that it bounced off this 200-day moving average, right? So hopefully in the next few days it holds above this 200 moving average, and that is also good news on the fundamental front as well as the technical side, right? And looking forward, why is this such a big deal for HIMS, right? It's not only HIMS. You can see that actually they partnered with Ro and LifeMD as well, right? So HIMS was not the only one that got this basically blessing from Novo Nordisk to sell Wegovy. But basically what it proves is actually HIMS and also these big line drug manufacturers, right? They are not actually in the same industry, right? HIMS is more towards distribution. Meanwhile, this Novo Nordisk and people like that might be more into manufacturing, right? And manufacturing has a lot of capex, has a lot of patenting and things like that, right? So the second very important point as to why this is important is actually the fact that Novo Nordisk is now very, very unlikely to sue HIMS, right? So you can see that for outsourcing facilities, compounding, distributing, or dispensing semaglutide injections product under 503B, FDA does not intend to take action for violations of FD&C Act arising from conditions that depend on semaglutide until 22nd of May, right? So a lot of people were scared that after 22nd of May comes around, maybe 23rd of May, actually FDA is going to sue HIMS or something like that happens, right? Or that HIMS has to stop the compounding businesses, right? So after this partnership, I think it's very, very unlikely that that FDA will come and sue HIMS for this, right? Because I think they'll work it out in the back rooms, right? Instead of a lawsuit coming from the FDA. If a lawsuit came from the FDA, I'm not gonna lie, I think HIMS will be at $20 immediately, right? So it's a very good thing that is taken out of the picture, especially because Bears kept mentioning this point. Oh, on the 22nd, on the 23rd of May, FDA is just going to sue HIMS and the stock is going to go down to 20, right? So if we take a look at the short interest, it's actually at 31.5%, right? And that's incredibly high, right? So either the bulls have got something wrong or the bears have got something wrong, right? But you can remember that stock like Tesla, also it was very, very shorted, right? Until Tesla made like a really big move, and then the short sellers lost a lot of money, then the short interest started coming down. So might we see a same like scenario happening in this case? I don't know, right? Nobody knows until it happens, right? So looking forward, what are the few big things that I'm looking forward to? Obviously, this deadline has been taken out. This was actually one of the big deadlines that I was looking forward to, but it's been taken out as of now, right? And then the two things that I'm really looking forward to is this short interest when it updates, as well as the earnings, right? If in 6 days the earnings come out and they have blowout earnings, you can see that we will probably be retesting like $45 or something like that, right? So full disclosure, I am a HIMS shareholder. I started buying somewhere here again, right? I have a lot of videos in the past. I'll link it on the top right or something like that. And then I was buying down to here, and now I'm happily sitting in some profits here. So the next two things obviously I'm looking forward to is the earnings in 6 days and also this short interest, right? If they come out with blowout earnings and the stock is $45, we could see another short squeeze, right? Because you can see 31% of the float is a very big number, right? So the next part of this video is going to be a portfolio update. If you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button. This will help out the channel immensely, and I thank you very much. You can see that my portfolio actually is at $11,000, and this is about what I put inside, right? You can see now that it's 12,000. I just added another $1,000 inside. It's in MYR now. So when the night comes, I'll convert it to 1,000 USD and then buy one of these shares, right? So I'm not going to add any new positions. In fact, I'm looking to concentrate the portfolio a bit more. I think this is a bit too many names for a $10,000 portfolio, right? And I just want to mention on this, right, because I think a lot of stocks that I want to buy actually is not on a platform like Moomoo, right? So Moomoo is a great platform and all, and I'll leave my link in the description or something, right? If you guys want to use a referral code, it gives you like less trading fees. I think 6 months free trading fees and things like that, right? I don't know. There's some benefit, right? So if you're gonna sign up anyways, do use my link, right? But it doesn't give you some shares like this, right? You can see that this is WISE and it's traded on the London Stock Exchange, right? And Moomoo doesn't support the London Stock Exchange. So for a smaller account like my Moomoo account, I'm perfectly willing to accept this, right? Because US and also Hong Kong shares is way more than enough shares for me to purchase, right? But actually in my main account, I do hold shares like WISE as well as a stock called Evolution. So this is basically a portfolio rundown, right? Because these are some of the stocks I own in my portfolio. So you can see that this is an extremely cheap European stock in my opinion. And this is also a growth stock in London, in my opinion. So actually the lesson here is use a correct broker, right? Because you don't only have to use one broker, right? I have 3 or 4 brokerage accounts, so I'm not using only Moomoo. So if I want to buy like WISE or something, for me it's fine, right? Because I'm buying it on another account. But imagine you say, oh, I'm too lazy to open another brokerage account, so I'm going to just not buy this share, right? That could be the biggest mistake of your life, right? What if you buy that share and then you see that actually it's growing, the fundamentals are doing well, and then you add, and that share turns out to bring your portfolio to like 100x or something like that. So picking a broker is incredibly important, right? So that's why I also have like Interactive Brokers and also Moomoo, right? Both has its perks and also its downsides. So maybe since we're the consumer, right, we can have more than one account. So having a brief run through of the positions, obviously I'm at about break even, about $160 worth of profits. It's basically nothing, right? It's like 1 point something percent, but 1 point something percent in 2 months. And also there has been huge volatility, right? Because I think the account went from like 11,000 to 12,000, means I had like 1,000 in profits, and then it went down to 10,000, and then now it's back at 11,000, right? So if you see, if you lengthen your time frame a bit, right, actually the volatility is not as bad as people think, right? Especially when you're adding in money every month, right? If you were adding in money every month, like me, for this particular portfolio, obviously I wish the market continued to tank, right? Because I'm adding in money every month, right? So for my main portfolio, where I'm pretty much like 80-90% allocated, obviously I don't want the market to tank, right? Because I'm not adding a lot of money compared to this account, right? Because this account I'm like adding like 10% of the account every month. So obviously that is also a shift in mindset, right? You shouldn't be so scared when you see things are dropping, right? When things are dropping, when things are going up, I'm still adding in $1,000 to basically continue to buy shares, right? So let's run through the positions. Amazon down 2.9%. You can see my biggest loser is JD.com and my biggest winner is Celsius Holdings. So did I expect this to be the case? Not really. So that's why we have a bit of a diversified portfolio here, right? But you can see that Celsius is up a staggering 35% since the purchase price. And so which shares am I purchasing today? I think the most likely candidate for me to purchase is Amazon, right? Because you can see that I have only about $1,000 in Amazon. And I'm building this as a more beginner-friendly portfolio where I want to put about 10% into every position, right? Instead of having varied portfolio positions. Like my main portfolio, I have like some positions that are 10%, some positions 20%, even some positions that are higher than that, right? So I'm not looking to do that. I'm looking to make it simple and stupid for this portfolio, and I want to compare at the end of the day which portfolio does better as well, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.